Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And of course, we're going to delve into the data and the charts. That's what it's all about here. No hype, no nonsense. What are the charts saying? Sometimes I'm right, sometimes I'm wrong, but ultimately it's probability driven, which is the key here, right? So it's all about probability, finding the setups in the trading charts, whether it's crypto, commodities, or stocks, that give us a high probability of success. More wins than losses should equal net profits. That's the bottom line. All right, follow me over here. Let's get right into the action today. So yesterday we had a crazy last bar surge on the S&P. Look at that, guys, right there. So this was what's amazing about this is you almost have to wonder if it's real. And again, I'm not a huge conspiracy theorist person, but here you were trading right here where we would not have confirmed. And this is the 10-minute chart on the S&P, by the way. So right here we're trading like this, trading basically nonchalantly into the close. And if we had closed right here, the S&P would not have confirmed above that major pivot from December. Well, guess what? All of a sudden, out of nowhere, kaboom to the upside, and it confirmed. So again, is it a fake out? Is it a real thing? It doesn't really matter to me. I just have to go with what the charts are saying, which is a confirmed breakout above that level. Now, in the overnight, amazing here, right? So S&P kind of trading neutral to higher. And then by this morning, notice how it's almost back down to where that candle began right there. And so what we're going to watch for today is, do we hold the breakout, the confirmed breakout? The probabilities do flip towards being slightly more bullish now because of the confirmed breakout. The only thing that would change that is if you reconfirm back below this line. So if we were to close below, like here, doesn't matter. That's not confirmation. That's not confirming a negation of the breakout and confirming to the downside. If we confirm, now you have a reversal, and actually you'd have a failed breakout. So these are little nuances that I teach in the Winning Trader series, but essentially it guides you to which direction is higher probability, which allows us to kind of monitor potential trade setups. What do we want to be long? Do we want to be short? What are we looking at in the market in the near term? Now, this is the daily S&P chart here, and you can see, again, we've been kind of hovering right up against this range. So this is that high from December that we were just talking about. Closed above, didn't confirm. Pierced, didn't confirm. Kissed it, didn't confirm. Closed above, didn't confirm. Confirmed, right? So just that's just the simplicity of it. And again, what does that mean? Well, until you confirm, the downside had the bigger probability. And we could see, it pulled back. It tried over and over again to break lower, buy the dippers, positive vibes on the economy, whatever it may be, that kept bringing us back up. And again, eventually, what's the path of least resistance? If you keep on trying to fight this way and you just get disappointed each time, eventually the path of least resistance is technically to the upside. And so that's what we have right now. And sure, the S&P is trading down a little bit at this point in the day. Let's watch throughout the day. Do we get any news? We have PMI numbers coming out today, I believe, and that could be something that could either kickstart a rally, a further move up, or it could cause further selling. So again, little things like this I will be monitoring as a technical trader today. All right, so next up, let's take a look at the NASDAQ 100 chart. Now, NASDAQ 100 is amazing here because we closed right at the double top. Today we are down just a little bit, so we're trading down just a little bit. So the NASDAQ 100 has not confirmed a breakout. It's only gone to double top. You can see you had a downsloping line. Sure, it got above that and slammed into the next resistance. This on the NASDAQ is key. So while the S&P has confirmed above its all-time highs, the NASDAQ 100 has not. Generally, you would say that shows a little relative weakness. Now, yesterday in the game plan, guys, I told you that the key level to short would be 142 Pierce right here on NVIDIA. And again, this was alpha given yesterday. Sure enough, we ran up in the early session, piercing that level. Let me just go back to this. Here was your initial open on NVIDIA on the 10-minute chart, soared on a 3-bar surge, piercing that level, that 140 level, it was over, I believe it was over here, wherever it was. Either way, reversing to the downside, and again, you can see that trend line that we talked about in just yesterday's game plan right here, pierced and reversed. It actually turned out to be a trade that I took with the Apex Live day trading room. Now, this one also played out. I had a $55 resistance on the intraday chart. You can see right here it pushed up, it reversed. There were some good profits taken by Drew, one of my elite traders in the trading room on that. But then we've seen the SMCI chart just continue to grind higher. This one's on a pace for a pretty impressive move. I am watching two key levels today for day trading shortable levels. This would be number one at around 63.50. You can see this pivot top right here, this flat top. And then there's an additional level. This is like the golden level. This actually is probably a good swing short if it gets to 67 right here. Notice again, gap fill, pivot low, so you have multiple factors at that level that would be very interesting as well. And I think just above this area is the Fibonacci 50% retrace. I always like to see if my fibs match up with any of these levels. Yep, you can see right here the blue line is just above the upper line. So right in this area, this is where I start to get interested in a swing short versus these lower levels are just day trading, quicker moves on the charts. All right. One other chart I wanted to quickly go over with you guys was Meta. Meta's trading down again this morning. Let's go to the big board and take a look here. And so what we see on the big board is that Meta again had 20 straight up days into yesterday. Yesterday would have been the 21st. And again, if you know the methodology, I kind of went over this in trading the close yesterday as well, is that when you have a time counts again are multiples of 7. Obviously there's more to it, which is in the Winning Trader series, but the idea is a multiple, a 3x of a 7, which is 21. It favors a pullback. All right, so alone, that doesn't really, like, if you have a time count, it doesn't mean, oh, let's go short it or go long on the time count, right? What you want to do is you want to use that as a factor and then look at the chart and say, okay, are there additional factors here? And sure enough, you have two factors. You have two trend lines. One, this low right here, right through that top where it kind of hits the underbelly all along here, right into there. And then you also have this parallel, right? These lows connected these lows to these lows, and then this high all the way up here, right there. So now when you have a time count, 20 straight up days, all right, going into your 21st, and you have two trend lines that are intersecting right at that price, that's where you start to say, now I have multiple factors, which again, the more factors, the higher probability, right? So again, like I said, one factor, I would say one solid factor, you get 60-40 odds. 60-40, 55-45. Yes, it favors that move of expectation, whether it's a pullback or a bounce, but it's not significant enough to say, okay, this is a high probability trade, right? I want to get in that 75-80% range. Once you get 2 or 3, now you're in that range, and we see Meta finally getting that down day yesterday and down a little bit today. Now, how low could Meta go? I mean, without bad news or the market's falling, probably not very far. I would start looking at basically 695 to 685. This area right in here is a little area right here, 680. That would kind of be a normal pullback. It would also get you basically to the midpoint of the parallel, right? From the high to the low, that would be support. Now, if the market sells off, that's a whole different ballgame than something like Meta that is so extended. I mean, if you look at the monthly chart on Meta, it is ridiculous. Like, again, you guys can do that on your own at home, but ultimately the monthly chart shows you how extended some of these big names are. All right. Let's walk over here. We have a couple stocks making big moves today. Solar Edge up, I think it's up about 30%. The first level, now this is a very aggressive trade. I want to first say that. And the reason I say that is because Solar Edge is at the very low end. I mean, look at this chart. You can barely see the candles down here when you zoom out to where this was trading at one point. So the tendency is when you have stocks beaten down like this, they tend to squeeze or have the risk of squeezing. So could you maybe day trade for a quick short off of this level here at 223.55? Yes, but honestly, I'm not even sure I would have the guts to take that day trade because, again, the chance of a squeeze even higher is there. Maybe if it got up to this gap fill up in this 33 range, which is still like 50% away because you also have this lower level right here. But again, suffice it to say, it's a big mover today. I'm not super thrilled with it as a short trade because of how beaten up it is. Remember, shorting, you're expecting price to go down. Yeah, it's up 30%. That's a big move. But if in the scheme of things, it's not that big of a move, right? I mean, it's so beaten down. Toll Brothers down on earnings about 5%. This stock, again, has really come in. I do think these go lower. So, again, the housing market is crumbling before our eyes. We're obviously seeing some key things. First level on Toll Brothers, 104 Pierce, 103.85 or so right here. That, again, is a gap fill and a shelf area. That should be technical support. That would be a short-term, maybe swing trade for a bounce. Maybe that coincides with yields starting to come a little bit lower. But aside from that, if we do head into a recession, you got to be thinking it's going even lower. And that goes for all of these KBH, Beazer Homes, all of these other ones as well. They most likely are headed lower. All right, take a look at Garmin. Garmin reporting earnings this morning. The stock is up, went right into resistance here. I want to show you this resistance at around 238. That level is an upsloping trend line right here. So high pivot, high pivot, high pivot. There is resistance around this 238 to 240 level. I haven't done a short here, even though it tagged that level. I'm going to wait till volume comes in. This is not a super heavy volume stock. Trades a little over 1 million shares a day. So I'm going to wait to see how the market looks at the open. Now, one trade that I am very bullish on, and you guys know I've talked about this before, is Celsius. So first of all, Celsius yesterday, take a look at this. So yesterday was up a little. After hours, it started to rally sharply higher when the company announced, and this was key, guys, Celsius came out and said, hey, we're going to report earnings Thursday after the close, so tomorrow after the close. In addition, we're going to give a business update. Now, business updates could be pretty broad range. It could entail a lot of things. But the one thing I know from trading for 26 years now is that when a company stock is beaten down like this, the insiders, the management team, which, by the way, have a lot of shares invested in the company, they want to kickstart some sort of rally. Trust me, they're very aware that every other stock is pretty much at an all-time high, and their stock is down 75% from where it was 12 months ago. And so my guess is they're going to either announce a share buyback or they're going to announce some sort of business initiatives. They might even announce some layoffs, which could be a positive, is cutting costs to increase productivity or profitability. So the idea here is that investors, when they saw that news yesterday after hours, they started to buy. Could be short covering too. I don't frankly really care. The idea is that you should see Celsius pop here going into that, and then we'll have to see what the company says tomorrow after hours. But going back to the chart, my favorite charts are these type of names. You have a company that's profitable, trading at about a 20, 25 PE, so relatively small PE ratio, so it's profitable. They don't really have much debt at all. And so, again, you look for these type of things, just like Wolf, frankly. I mean, Wolf ran yesterday. I did take profits with members in Smart Money stocks, but we talked about this chart here, cup and handle pattern, right? So again, your cup, your handle, if you zoom out on this chart, it's very similar to Celsius, down at the low end of the range in a bull market. So eventually the idea is that some of these names will get pops, and Celsius's time may be coming here. We'll have to watch and see. It is trading up about $1 and change pre-market. But I think, again, the big level to test is going to be 25. If it can get through 25, it could make a nice push into the maybe even low 30s, but depending on what the company says. All right, let's go to Bitcoin real quick. Bitcoin in the crypto market struggled yesterday. Going over to the big board real quick here. Let's take a look. So Bitcoin continues to just languish. Now, the positive for Bitcoin is that yesterday it was down decently, and then it basically closed flat on the day. So that was good. Altcoins were not so lucky. We did see something like Solana come off of its lows, but still down on the day. The caveat here is that you're just still trading between these two levels. So I love this to kind of show how you're waiting patiently. Like, this could be a chart of gold, this could be a chart of a stock. It doesn't matter. Charting for us, whether it's a crypto or a stock or a commodity or even Forex, it's all the same. Like, I couldn't care less what it is. You could show me a chart of rocks, right? If people are trading rocks, show me a chart of rocks. I can chart it. Bull flags are bull flags, bear flags are bear flags, etc. The reason why that is, by the way, is because humans are trading it. Humans don't change. Greed is greed, fear is fear. And so that's why chart patterns tend to repeat over and over again, and why we can get an edge when we learn what those patterns are signaling, right? What's the probability of a move? Point being here on this chart, very simply, you have support here and resistance here. Which way do we go? The only kind of negative here for Bitcoin is that you are about 10-15% off the all-time highs, right? And the stock market, S&P did make a new all-time high yesterday. So it's a little troublesome that we're not seeing a bigger bid in crypto, especially the altcoins, which just keep seeming to go down here in the recent period. But again, overall, watch the levels. We break this level, you should get a big move down. You break this level, you should get a big move up. It's a wait and see market on Bitcoin. All right, next up, let's go to the gold chart real quick and see what we have on gold. And if we flip over to the gold chart, gold is trying to negate the doji candle right here. As of now, it pierced but is not above. If it closes above, it should be, honestly, a pretty easy hop, skip, and a jump to 3,000 per ounce. Either way, I still think it's going there, whether it pulls back first or not. But again, that's your bigger parallel. If the doji holds and you start to pull back, we know our level of support is around 2790, and if it pierced that, you'd look at around 2700. So again, beautiful upsloping parallel, upside resistance. By the way, this would be very shocking if it didn't pull back off 3,000, the even number, and this trend line. That would be a very solid resistance level. Silver, again, you do have the bullish pattern here. It's trying to kind of move up, but then you have this one candle that kind of throws a wrench in that, which, as I said yesterday, it takes the odds from heavily being bullish to more neutral on this. So it's just a wait and see. If we rally higher and take out that high, just like the doji kind of thing on the gold chart, if we close above this 3340 level, it should go straight up to about 3480. But same thing, if we don't, then there's that possibility, as there always is, that we could trade back down and head back into the high 28s. Oil today inching up just a little bit, so it continues to do its thing. Again, no exposure for me, so not much to do here. Still looking at 77 to maybe re-short, and then obviously to buy, I don't know if I'd even buy this, because if it ever breaks this 66, 65 level, it really could take a dump. Now, natural gas, this one's a big one, guys. So this one I've actually had to maneuver here. I added this morning to my short again on this at a pierce of this upper trend line. So again, if you look, you have your pivot low, pivot low, pivot low, high, high, and high. And here this should be, again, listen, do I know if this is the top? Absolutely not, right? No idea if it's the top. All I can do is look at levels. And again, I've been able to maneuver my average up because I start small, especially on natural gas, which, as they call it, the name on Wall Street or in the commodities arena is the widowmaker for a reason, because it has these crazy moves that can make people go broke if you overload a position. So I'm just working my average up here. I'm out of the money right now. Let's see what happens at this parallel. If it breaks this parallel, by the way, going back to the chart, if it breaks this parallel, where would it go? This gap fill right here. Very rare you get gaps on natural gas, but the gap fill right here would be 440. That would be your next level. But right now you can see it pierced this line right here, and it is pulling back a little bit. The question is what happens today. We do have, I think tomorrow we get natural gas inventories on Thursday. Actually, Monday markets were closed. So yeah, tomorrow they will come out on Thursday as they stay on the same day there. So this is an interesting trade on natural gas. We'll have to see. By the way, it's had about a 50% move since the beginning of February. So that's a big move, but in natural gas terms, that's not outlandish. If that was gold, it would be like, holy cow, this is the craziest thing ever. Natural gas, that's pretty abnormal, but it's not unheard of because of the volatility of natural gas. All right, guys, I got to get to my trading room. I want to thank you all for tuning in. As always, you rock my world. Thank you so much for the kind words, the comments, everything. I will talk to you guys a little later for Trading the Close. Take care.